screw something up. Are we uh, cursing or not?
That's up to you. I mean, that's up to you. I'm okay with not.
Okay.
And I will do my best, but sometimes that kind of stuff just kind of slips.
No,
So,
I'm okay with it. It's just a. It don't have to be a. It's a factor when when you post. I have to say whether it has explicit content.
yeah, we can figure that out, I guess, on the fly.
Okay. All
Gotcha.
right. I didn't know if you had like a no, definitely I got to do it,
No,
or
no, no,
I don't
no.
care. Okay, this is our very first episode, Tax Pros Unplugged, and we're gonna dive into some hot button topics for our taxpayers and the professionals who serve them. This is our first go. I'm Kelly and my co-host Jared, and I don't know. We're gonna have try to have some fun today, and see if anybody thinks maybe taxes can be slightly less boring than y'all think they are. So, quick disclaimer to start because we have to remind everybody that this podcast is for educational purposes and not intended as individual tax advice. So, please be sure to consult your tax professional for specific advice relating to your personal situation. Okay, so hi, Jared. Welcome to our very first podcast.
Yeah, thank you. It's like the maiden voyage, right? You just don't know where this is going to land or how it's going to take
Right?
off or where it's going to go, but you're just excited for the ride.
Birthed out of several conversations
Yep.
and a few snarky comments at training. And here we go. We're going to try to continue to be snarky, but share that snark with the rest of the world, right?
Right. Well, it comes natural. You just got to ride it and just keep going, I guess. So,
Yeah, neither of us take ourselves too seriously. So I guess that's probably a good thing. And did you wear a fun shirt today for us?
I did. It's one of my dad tax shirts. Um, it's like apparently a thing where every Father's Day I have to get one of these. So, I don't know. I do have. We are complete opposites from that regard. Obviously, Kelly, you never wear anything with words on it, or pictures, or multiple colors. Whereas I'm just a hillbilly from Ohio that likes to wear funny T-shirts. So,
Yeah.
every
Yesterday's had a raccoon on it,
it did,
actually.
it did, and it was eating French fries. I think it was a dad packed one. So, yeah,
It was scary the minute I saw it.
yeah.
So. All right. So, since we love taxes and we're going to start, we thought we would be non controversial. So, we'll start our very first podcast by talking about the most non controversial thing ever, which is Trump accounts.
Oh my gosh, Trump accounts.
And we're instantly banned.
The account that formerly known as MAGA, right? So,
That's right. It was actually for a little minute supposed to be called a MAGA account,
right.
and then they switched it.
Yeah.
I think it's the ultimate troll, though, because these things are going to be around for a while.
Oh my gosh, yeah, and it's just kind of like anything else. Like we've seen these accounts come and go, whether it's 529s, HSAs, now Trump account. That it's just going to be expanded. There are things that are going to be updated on it, but I don't know. I mean, there could become somebody that could come along and get so triggered by this and just be like, I'm done listening right now. But it is one of those things where I can foresee maybe the name changing in the future, but some of the benefits, some of the things that it's there will probably only get bigger, at least in my opinion.
Yeah. So let's talk about that. What do you like about these Trump accounts? These are brand new accounts, just for our listeners, that is nothing that we've seen before. Although it sort of takes the feeling of a couple things that we do have around in the tax code and we kind of understand about it. So, how do you view these things in a practical application for people to be using?
Well, I love them, first of all. Let me just say that. I think it just opens the door for future investing, future things that it's designed for our kids, right? And I liken this Trump account to like the cousin to the 529. Well, I'm not a huge 529 fan. My problem with 529s is my kids will probably have to go into a trade. I probably don't recommend for my children, who are 6 and 3, by the way, which is a long ways away from ever having to consider this. But there's tons of studies out there, and I don't know if you've seen these before, but in the next 15 to 20 years, our trades are in trouble. Our construction industry, plumbers, electricians, there's these boomers that are getting out of this, and there's nobody to replace them. So if our kids got into a trade, they could make a great living. Well, 529s, if the investment platform for 529s is just simply for post-secondary education, that's going to be rough, and then you're going to feel like you're going to be wasting some money on this investment, and if these kids don't go to college. So essentially, this Trump account, what I love about it is they can take this money out and they can invest it in a business. They can start a business. There's the ways to use these open the door a little bit more proactively.
Buy a home?
Yeah, buy a home. You can even use this money to go to college too. So it's kind of a supplemental account for parents and employers and everybody to invest in the future workforce. So I love it.
Yeah, so let's break down the specifics on these just so that everybody understands. So what these new things are is, I like how you said that they're a cousin to the 529. They are have an annual contribution limit of $5,000, and the money is going to go in after tax, but then it's going to grow tax deferred, kind of.
Yeah.
Because the thought is that when you take it out, if your income is so low, it's going to be taxed at a very low, if any, rate when the kid ends up being able to use it after they're age 18.
Right.
Is that how you're understanding it?
Yeah. So, I mean, I liken this to like a brokerage account. We're taking ordinary income, throwing it into this account, and it's going to grow like any other stock would. And when it's pulled out properly, it's going to be capital gains rates, and that always, I don't know about you, but I feel like my mission in life. Clients come all the time like, Jared, I'm going to sell this, but I want to avoid capital gains, as if it's the boogeyman in the closet. And I'm not saying ignorance in a negative connotation. They just don't know, right? So I feel like one of my things in life that I have to feel like I have to accomplish is tell everybody that no, you don't understand. You'd rather have capital gains rather than ordinary income. It's preferential treatment because, Kelly, I'm not telling you anything you don't already know, but our capital gains buckets are 0, 15, and 20%. So meaning if you got an 18-year-old kid, let's just say they got $35,000 in this Trump account, they have really very little to no income at all. You're going to find out that when they take that money out, it's probably going to be taxed at 0 or at max 15%. So it's a good deal from that aspect because it is tax preferential rather than tax detrimental.
All right. And I think the other thing is you mentioned like it's growing, and that's where it's a little bit different than a traditional investment account, is that its growth over the next, let's just say a kid happened to be 2 when these things start, or your kid is 3 and now 15 years. They're not paying tax though during this 15-year period. So it's, in that sense, that's why I like how you said it's kind of like a cousin. It's sort of like a little bit like a traditional IRA, a little bit like a 529. It's a little mashup of everything.
Right.
But it's not going to pay tax during this kid's early years lifetime. It's tax deferred during that period, which is again like 15 years of just growth and no taxes, which is just so cool because we really don't see too many things in our economy where like, nope, this thing is totally like tax neutral. We're not going to have any taxes for whatever happens.
I want to say this, that I felt in the last like 10 years that other governments are playing chess and our government's playing checkers. So like, let me just give you this from this aspect. Like China is starting to be concerned with their future consumers, right? Because they've been so restrictive on who can have kids, that kind of stuff. And other governments are doing the same thing. But this feels absolutely like an investment opportunity in the future. And we haven't even touched on the fact that in 2026, if you have a child or a child born in 2026, the government's going to seed $1,000. They're going to give you $1,000 for this Trump account.
Hey, I know. I think that went back to the beginning of 25. Because one of my grandkids is going to qualify for this. That was just born. I am pretty sure we're going to I think this one retroed.
Huh. Okay.
We just don't have the funds yet. So
Right.
we're talking about this so early. That's the other thing is that, breaking news, you're getting this here first. Nobody's even talking about these things because nobody quite knows how they even are going to like get created. But they're here. Let's talk about one other cool thing about these Trump accounts. And you and I both picked up on this little like blurb. And, we're both business owners and we kind of work a lot with small businesses. What is your absolute favorite little extra bonus in this Trump account?
So the best thing about this is I can go to one of my employees who has kids, and I can give $2,000 to my employee. The employee doesn't pay any tax on it at all. Remember, we said at the beginning of this, like, this is a post-tax account. I can put money into, I can give my employee $2,000. They can distribute it to their children for the Trump accounts. I get a deduction. I can write that off as a business owner. The employee doesn't have to claim it at all. The other cool thing about it is it's going to save me 7.65% plus unemployment, plus workman's comp, plus all these ancillary taxes I have to pay to give my employee. So at a minimum, I'm saving 7.65%, but probably more like 9. So when I give, there's very few things, I mean, you could probably name a few of them, very few things that we can give our employees that is preferential as far as not just wages, fringe benefits, things that help our employees live life that they don't necessarily have to claim as income. So it's a good deal. And the famous saying that we've kind of coined, the juices for this Trump accounts, the juices for the businesses.
I love this. Yeah, I think it's a really cool thing. Great, like employee benefit. Small businesses, again, we're always sort of looking out for how we can stay competitive with employee benefits, to keep great staff and things like that. And it's sometimes harder to compete on a raw dollar for dollar aspect, but this is a kind of an extra benefit. And I think it might be 2,500. I think it's half. Two or 20, I think it might be 2,500.
Okay.
We'll like fact check some of ourselves because we
Breaking
don't
news. This
remember.
is like 2 weeks old.
I know it's so new, but it's like, yeah. So we love that. Okay, cool. All right, let's talk about one more fun tax topic. Again, I love this because I like to kind of debunk or create new social media uh, headlines. So, are we got a little extra gift or rework with the
Bonus.
OB3 in the name of bonus depreciation. And basically, I mean, the news headline is I'm writing off everything that I've ever bought for my business ever, including my house. Is that
Yeah.
right?
Well, yeah, that's what we all hear, right? I can just write it off, right? And I want to bounce this back to you as many times as I can. But the one thing that I always like to talk about when we're talking about buying assets as a business owner, we were set to be what 60% is the max we could have taken for bonus until this law changed. I like to liken any type of accelerated depreciation. What I'm talking about is we write things off faster for as simple as terms as I can get. But I liken this to like being a little gluttonous. Like you're super hungry right now. Like I'm facing this tax that's just going to eat me alive. Or like you're stranded on an island and you're like, okay, I've got this amount of food to last me 5 days and liken that to 5 years, but I'm going to eat it all right now. But tomorrow I'm screwed, right? So I'm a little careful with doing any type of accelerated depreciation and writing it off all right now, simply because tomorrow I might still be hungry. Next year I might need more deduction. And the common misconception amongst taxpayers is if I write this off now, I'm saving today's problem, and nothing ever bites me in the butt, right? So it's a very cool, and I'm very glad that they pushed our bonus depreciation back up to 100% and made it permanent. But I'm a little cautious because just because you can do this doesn't mean you necessarily should. So you tell me what's I guess your overall method when it comes to when clients are like, I just want to write it off. I want to save as much money as I can right now.
Yeah, I agree. I think that I always say for every pro, there is a con. And so with bonus depreciation, there's a real potential to get a really big, great tax benefit today. But the problem is you don't usually have it tomorrow. And then the other sneaky little problem is that if you're not going to hold that asset long term, you're going to run into a pesky little thing called recapture, which is just a big fancy word, meaning you have to repay what you took a little too fast. And so I agree with you. I think that I don't try to always take bonus. I think it needs to be an informed decision. The reason I love, though, the option for the 100% bonus is that a lot of small businesses pay for these really large capital expenses in cash.
Mhm.
So there's a misnomer that everybody finances everything. And I don't always see that. I have some business owners that definitely finance everything they buy. And then I have others that stockpile a bunch of cash. They deploy that cash. They buy a really huge fixed asset. They spend $50,000 of cash. It's very hard for me to not encourage them to take bonus depreciation. When they parted with that money,
Yep.
why should they then wait to recapture and pay tax, over the next 5 years when they deployed that capital into their business today? So I like the option. I think it's a case by case scenario. I agree with you. I think it's overused and politicized, like, oh, it's or I should say, like, on TikTok everybody's like, oh, you can write off everything, but there is some cool extras. So what are some cool bonuses you saw in this? Like, I joked and said we're writing off the house, but there are some things that got added into this that are actually going to give us some additional potential deductions with bonus that we never had before.
I'm not exactly sure what you're referring to off the top of my head.
So we now have not just qualified improvement property, but
Oh
we're going
yeah,
to be able to write off. I'm trying to find the right word here.
manufacturing. Are you talking about the manufacturing?
Manufacturing.
Yeah.
Yeah.
So
So we're going to, like, buildings, like legit buildings.
yeah, well, and it's the cool thing that, like, at least I'm from corn front country, Ohio, right? We've got three offices. My home office is literally between a soybean field and like a cornfield. One of the first things, like, the tax code wants you to invest. The administration wants you to invest in property and infrastructure and construction and building the things that we build up here. So one of the cool things that we were able to do, what we got from this, is if you're in agriculture or manufacturing or anything like that, and you build a property or buy a property, you got ultra incentives to take this 100% bonus right now. Where generally with those type of properties, you're taking those over 27, mostly 39 years,
Right.
mostly 39 years. So you bought something for 39 years, boom, you can place it into service. You could go out and get a cost segregation study, and you could accelerate some of the stuff. But this 100% bonus for that is huge, especially
Yeah.
for somebody. And you hit it on the head when you said somebody buys something cash. That is a perfect example of trying to give them an opportunity to see a true profit at the end of the year, because they spent the 500 grand or whatever it was. So they're not going to, if you just straight line depreciate this for 39 years, they're going to show a profit even though they don't have the money in the bank.
That's right.
So anytime you do have cash, I love the way you said that. If there is something paid in cash, that gives a true depiction of their profit versus their balance sheet, the money in the bank.
Yeah. Yeah, and I think that's what I like to see the options for people, because I think that unfortunately in the complexities of our tax code, we've added too, many, I don't know, just ways to make it more difficult.
Hmm.
And for a lot of small businesses, they're just really not that complex. They're like, I have the cash, I spent it. Why should I not get to write it off? And then I'm always like the bad guy when I say, oh, yeah, because this rule. And so I look at this as just common sense ability to allow people to match their tax deduction with the cash that they spent. And I think that's pretty cool. So I think this is a good thing, of course, for small businesses, the option. But to highlight what you and I both said is that what we should not be doing is a one size fits all approach, because that's never the right answer. So there are a whole host of other scenarios where you might not want to take bonus depreciation because it's going to hurt you. Do you have any examples of that? Do you have like a case, like a client where you're like, this was a
Yeah,
bad choice to take bonus and you're
yeah.
talking them out of it?
They weren't even my client at the time. This gentleman came to me the year after. He's a predominant restaurant owner, and he also owns a construction company. Well, his construction company's profitable every year, and he does well for himself. Okay, the previous CPA that did his tax return for, I want to say it was probably 2019, something like that. When he bought this restaurant and put all the equipment in there, like the freezers, the ovens, the coolers, and all that kind of stuff, all of the assets inside of the building, so they can actually start cooking, serving food, and collecting money. This previous CPA bonused 100% of it. We're talking about like $800,000 worth of deduction. And the reason they did that, this is the year that they didn't even make any money. They didn't even like pull any revenue in. I think they made like $40,000 in revenue that first year. So that's like maybe 2 months of working. Took all of this bonus depreciation because this other business over here was making such a sizable profit that it wiped out some of the tax in front of his face. And really the problem that I have with that is when I ask the tax payer, the individual that owns this business, why did this happen? The response I got was, I didn't even know it was going to happen. We didn't have a conversation. She just assumed that I wasn't going to want to pay tax, which she was partially right, but we didn't even talk about it. So, and it's basically, it's put him in a position that he has no deduction other than his actual cost that he's incurring every year. You know, his cost of goods, which is his food and stuff. But it's put him in a position where he's purchased all of this, but he took all the benefit all at once. And now, you know, it's been 5 years since this restaurant started, and a lot of his equipment some of his equipment he's replacing. So he's trading it in and getting rid of it, and now he's paying tax on it a little more aggressively than he potentially would have if we just let this ride. So we're regretting right now the decision that was made by the previous CPA for sure.
Yeah. Yeah, I see that a lot too. I think that people don't quite understand, like you said, it's always easy to look at the option to eat everything that's right in front of you. I like that, analogy. But the problem is sometimes, particularly with small businesses, I always ask, like, how profitable do you think this thing's going to be in the next 12 or 24 months? And a lot of them know that this thing will be a very profitable endeavor, and they might be going to be kicked 3 brackets up in the following year. And they kind of took the deduction. And remember, when you get these deductions, you get them in the tax bracket where you live today, but not where you live in the future. And so, dollar for dollar, that exact same deduction may have had a better impact for you by waiting till you were actually making profit. That's not always the case. There's plenty of scenarios where that's not. But I think that, again, back to, like we said, you have to have like a comprehensive conversation about this, because there is just not one size fits all when it comes to bonus. But the cool thing is we have it, which I think gives us more options in our toolbox to help people find the best solution for them.
It's like any tool, right? This can be a great tool, or it can be an absolute detriment. It just depends who's holding the tool, right?
Yeah.
Like who understands it, who's trying to keep their eyes on the horizon rather than the tree in front of their face. It's really, it can be great or it can be dangerous.
And how not to just click the first option that comes on your box and your software when that comes to play. So, we wanted to make sure, in our goal in doing this podcast, is that you and I both are very passionate about not just obviously saving money for our clients and our, taxpayers, but also talking to other tax professionals, because both of us, kind of talk a lot about practice management. We both run fairly similarly sized kind of practices with multiple locations and people, and which is a little bit different in the world that we run in, because a lot of people are solo practitioners, but we're very passionate about those tax professionals that are out there trying to make it, particularly the next generation, although you're a little bit younger than me. But So you might be already next genning, but
Yeah,
whatever.
probably something like that.
So we also want to make sure that we talked about some of the things in practice management, just running the day to day, you know, running a business, because that's also a pretty big hat that both of us wear. So lots of things happening in the just, and I think this is just every business is having, you know, these kind of questions and things come up, but there's a ton of technology that's coming at us every day. So I thought it'd be fun to unpack a little bit about what is your favorite kind of piece of tech for the week that you're using or, you know, embracing. I know that you do joke that this is not your favorite thing because you
Yeah.
are, what do you say, you're an 80-year-old man?
80-year-old man in a 40-year-old body, and it's
Yeah.
this segment always feels like to me like the caveman's like fire. Fire is my favorite thing that's been invented lately. You know what I mean? And you're like, dude, I'm driving a car now. So you're just talking about fire, and well, yeah,
Like I'm
I
making you nervous now.
well, not necessarily nervous, but it's one of those things where it's like we've been hesitant to some of the technology, right? And from our perspective and what I've always been a part of is like technology is great, right? It's a tool. Let's make sure we use the tool appropriately. And we don't want to sacrifice certain things to have this new tool, this fancy shiny new toy. And we are a little bit slow to this. Like there are other firms that are out there utilizing a lot of tools, a lot of different types of tools. We have been very, very selective with our selection of the tools. The one thing that I've been very, very cautious about, and I know that AI is coming a long way and it's got a long way yet to go, but I'm terrified of having my interaction with my taxpayers, my clients, to feel like they're dealing with a bot, right? You can't even go to Wendy's and go through the drive-through because a bot is now doing that. And it's just like there is a point in time where you can really remove yourself and personal interaction. And I think Kelly, you can speak on this, but literally what I do every day, the reason that I can't be replaced by AI is because I can sit down and have a conversation with somebody. I can critically think past algorithms and patterns, you know what I mean? And I can tailor something directly to this taxpayer. And despite what, you know, what might the trends might be. But that's what brings us value over top of an AI bot. But that being said, one of the things that I'm excited about, we're actually getting ready to beta test a new platform for our staff to use. It's going to encompass communication with clients, some interpersonal or inner office like functionality and workflow, and basically trying to keep us on task and having one platform rather than like three. It's gonna probably encompass some of our scheduling. Like I said, communication with clients. I know that this has been around a long time, but we've not tried to incorporate it yet. But texting clients, texting reminders, asking how we did. You know, if there's anything that we can improve upon, which, you know, people are people. You can get the good, the bad, the ugly. But I am a big fan of saying, hey, if there's something that we just don't see that we're doing that could make your experience as a taxpayer better, we want to try to improve that. We want to try to do something like that. So, like I said, I always feel like I'm just saying fire to you, Kelly, because you're like 30 steps ahead in the technology world. And I'm back here like, that stick's pretty cool.
That's okay. That's okay. There's room for the cavemen sometimes at the table too, but
Yeah, right, yeah, yeah. Sometimes you need hunters.
yes, that's right. Hey, we always still need hunters. I love that. Well, I mean, I think you're right. You know, you and I are we deviate here a little bit. Not too much though. We do already use like I think but you know, I've been talking to you about that is like a firm management system. Any of them that are out there from running an operation, they all have a little bit of like things that you're like, oh, I wish you did a little bit more, or whatever. I don't disagree with you though. I think my approach to any level of technology is not necessarily how I can replace the human interaction, but how I can make the part behind the scenes that is just sort of the necessity of our jobs more efficient, more effective, quicker, because we are human, and we do have balance in that we have families and lives, and we want to not just work until we fall over at our desk, which I'm not a big fan of. So from a tech perspective, I certainly am a little bit more uh, curious in the tech space right now, and so I think, like, pretty much every week testing something. So
Mm.
kind of my job is I look at different new things that are coming down, test to see if it could be a good fit for us, or me, or anybody. And I have lots of favorites, things that I pass on that aren't there yet, all that kind of stuff. It's moving very quickly. One of my new favorite pieces of technology, really, and kind of AI-ish, is an app called Whisperflow. And I think I might have mentioned it to you, or I was telling Amy, like, it's a very high-end talk-to-text uh, technology, but it's basically formatting like emails into full paragraphs, and it's picking up on the words correctly. And you know how when you talk text like on your cell phone, it doesn't really translate everything correct. This is really, really good,
Mm.
but it layers over all of your apps. So, for instance, I can respond to an email with, as quick as I just said, "Hey, Jared, thanks so much for seeing me today. Here's a quick recap of what we're talking about. Do this, do that. Thanks. Have a great day, Kelly." And boom, and it's going to have that in an email, which is way faster than I can type it. And I'm a
Oh
fast
yeah.
typer, because I know a lot of people struggle with the typing anyway, and it's harder on a laptop. I kind of learned old school on a, you know, type.
Yeah.
Well, I was a computer, but I
Yeah.
can type pretty fast, but I know I'm a lot faster than other people. It's super quick. And so I've been loving that because it's really a time saver. And then I have it on my cell phone too, so I can just respond to an email on that and, real quick talk to it. It's a little weird that you're talking to your computer in your office. So I think that's the funny is, like, so
Yep.
I'm sitting there and I'm like, hey, I'm just talking to my computer. And they think I'm talking to somebody, but I'm just writing an email. So
So there's so many movie references that I can make that are sci-fi, where like in Alien they're like yes mother and it's the AI computer system that you're never going to get because you've never seen any of those movies. So I'll digress.
that
So
is correct. Right. So you can make all of the movie references, and I probably won't
we'll
know
not
any
get
of
them.
them. Yeah. And thank you for reminding me that I have lived a highly sheltered life.
Well, sheltered or like very very directive. Like hey, I don't have time for that. Whereas like hey, I'm consuming Bluey every day at this point.
Also
Um,
that, yeah, I'm like, oh, so I do know Bluey though. My grandkids
yeah.
showed you that. I do know who it is. I've never actually seen the show, but I do know the uh,
Oh, it's good.
character.
It's good times. It's
Okay.
15 minutes of your life that you're gonna never regret you did.
Okay. All right. So I think this was good. So I guess the wrap up here is that what we're trying to do is talk plain speak, and if you hear both of us kind of talk in reality, neither of us are going to sit here as tax professionals and regurgitate code sections and try to sound super smart to make you feel dumber, because it's just not how we play. So our goal is to talk real speak to real complex topics, and our hope is that some people who are listening and interacting with us have questions, and that we can answer them in a way that makes sense and break it down the way we think about it. Because, like, I think you and I both are like, oh, I just
Yep.
don't think through it quite as complex as the ridiculous code sections that we're given. And so our hope is that we'll answer those questions. So in a future segments, we're going to do a little mailbag, and we might do some viewer Q&A. We don't have that because we just decided to throw this podcast together and try this, but for
I,
future we will. So we
I
will
do.
encourage our listeners to give us some Q&A and hot topics or things you have questions about. And also, because we're doing this in real life in our kind of day jobs, also bringing in client stories and
Right.
kind of real things that we're seeing happening inside of small businesses in the day to day operations of what we're doing.
I got one wrap up thing, and I got a question for you. Is that
Yeah.
okay? So the one wrap up thing that I think that everybody should go do, if you own a business, go talk to your financial advisor about Trump accounts, and go talk to your tax professional about Trump accounts. The other thing that I was going to ask you is, do you think, yes or no, that financial advisors are going to push these Trump accounts? And if yes, why? If no, why? Hmm.
Um, so I think I'm going to have to go with my transparent here. I'm going to try to be, sometimes I'm a little politically correct, but I'm not going to be. So I think if there is not monetary incentive for financial advisors, they may not talk about these. If the funds that the Trump accounts can be invested in have the ability to turn monetary profit back to the financial advisors, and I will caveat, I know some good financial advisors who will do the right thing ethically, but unfortunately, there are a lot of people that will probably just not talk about this because they don't have a financial, gain to be had from them because they're supposed to be, they have to be invested in a narrow scope of funds that are directly to the S&P. They can't have certain, I think, loads and commission structures. So again, if and that's good, that's a good thing, but if they're not, then the financial advisors won't talk about them, which means they won't get the press that they should. And so maybe we'll give them some press, like, hey, we don't make
Yeah.
any money off of you getting a Trump account, right?
No. I think that these Trump accounts are like insulated and protected from a fee based standpoint. That's how they were written.
Yeah.
So my fear is, I got the same situation. I got two or three really good financial advisors, and if they're truly acting as a fiduciary, meaning they're doing what's best for you rather than their pocket, those fiduciaries, those true fiduciaries, will actually mention these to you. And I've already been in contact with mine, as far as for our companies, and we're going to be going through with all of our companies in the next couple weeks and talking about Trump accounts. So it is a good deal. But if you're out there, you own a business and you have payroll, you have employees, go talk to your financial advisor about Trump accounts. There is no losing, in my opinion, to these Trump accounts. It's all good.
Yeah. No, I agree with that. And I think that's a good takeaway is that we hope that, people, and again, my, mission, and I think yours is to elevate the small business owner.
Hmm.
And this is a great way to encourage investing in the next generation and also keeping your employees more happy, more sticky to your company, giving them more reasons to love, kind of working with you instead of getting gobbled up by private equity or these giant consolidated corporations that don't give a crap about you.
Not naming any names.
Never.
Yeah.
Yeah. So I guess that's how I'll be. I'll just won't be shy and just say how I really feel about most people, which is,
Right.
it's
Right.
it's not going to be everybody's cup of tea, but, I
Correct.
have opinions.
What are they going to do?
So
Take my pay? Yeah.
all right. Well, I think that was good. Thanks for if you listened to this long to our crazy adventures. We hope that you'll join us again. We will start to put these on socials. So like and subscribe and do all the things that you're supposed to do. At some point, I will bring Jared into 2025 and create some level of social media presence for him because as I believe right now, I don't think you exist on most social
No.
platforms.
I am
But
starting to download some stuff, but I don't know how to
there we
work
go.
it. There we go.
Yeah, I'm going to do my best to bring you up to speed in 2025. And so thanks for listening, and we'll see you next time.
Thanks. Yeah.